Welcome to Standard Chartered Money Insights, a podcast series by Standard Chartered Bank that brings you market views and insights on the go.
Hello everyone, welcome to today's edition of Cut to the Chase. Today is Tuesday, the 14th of July, and my name is Manpreet. Now, in recent days, we have seen Middle East tensions flare up once again amid renewed military strikes in the region. The current series of tit-for-tat strikes follows attacks on ships attempting to cross the Strait of Hormuz as the US and Iran accused each other of violating the terms of the US-Iran interim deal. The market reaction, though, has been more muted than one might have expected given these headlines. Now, it's true that Brent oil prices did approach $80 per barrel. The US 10-year bond yield moved a touch above 4.5%, and some key Asian equity benchmarks fell by just under 2%. However, this magnitude of volatility suggests that while there is a little concern in markets, that concern remains well contained for the time being. More importantly, though, market expectations of inflation showed little signs of stress. The level of the 5-year inflation swap, a measure that's considered a key benchmark of the market's expectations of inflation in the future, remained well within the lower half of this year's range. In our view, this inflation expectation indicator remains the most important signal for whether the Fed is able to keep policy unchanged this year, as indeed we expect. Now, in our outlook for the second half of 2026, we noted that while we expect oil prices to continue to soften on a 6 to 12-month horizon, markets rarely move in a straight line, a view indeed that's now being borne out in practice. However, I would add that volatile markets are also when some of the most interesting investment opportunities also become available. So against that context, how should an investor respond? Now, it's probable that the volatility triggered by the current geopolitical events continues over the next few days, but we nevertheless see growing pockets of opportunity. The pullback in equities offers an opportune add or rebalance exposure, including to the US technology sector ahead of the upcoming earnings season, as we discussed in greater detail in last Friday's weekly market view, or indeed to our preferred Asian equity markets. Meanwhile, over in bond markets, the modest rise in bond yields offers an opportunity to lock in the yield, especially in emerging market US dollar bonds, which is where we are overweight. So, thanks again for joining us today. We hope you enjoyed today's podcast, and we look forward to speaking with you again soon.
Thank you for listening to Standard Chartered Money Insights, a podcast series by Standard Chartered Bank. For more details, visit Market Views on the Go on our website or click the link in the description.